Everyone's making New Year's resolutions about gym and eating healthy. Meanwhile, the smart money people, they're making moves right now that will save them thousands of dollars in their tax money in 2026. Most people wait until next December to think about taxes. By then, you've missed 90% of the opportunities. But if you take action in the first quarter of 2026, you can set yourself up for massive tax savings by the time April 2027 rolls around. I'm going to show you exactly what to do starting this month. Let's get into it. Welcome back to KP Money Talks, where we're all about helping you keep more of what you earn through smart financial strategies. So if you want to save thousands of dollars every week, hit that subscribe button. Today, we're talking New Year tax moves. Strategies you can implement right now, early 2026, to minimize what you'll owe in taxes when you file next year. We're covering tax planning fundamentals, retirement contribution strategies, and smart record keeping systems. These aren't last minute scrambles that everybody does. This is proactive planning that puts you in control. Let's get into it. First things first, you need to establish your tax strategy for the year ahead. January is the perfect time because you have a clean slate and maximum flexibility. Let's review your 2025 tax situation. Before you can plan for 2026, you need to understand where you stand from 2025. Pull out your final December pay stub and ask yourself, Number 1, what was my total income? Number 2, how much did that contribute to my retirement accounts? Number 3, what was withheld for federal and state taxes? And number 4, am I getting a refund or will I owe? If you're getting a massive refund, you gave the government an interest-free loan. If you owe thousands, you didn't withhold enough. Either way, now's the time to fix it. Now let's adjust your withholding. This is huge and almost nobody does it. Go to your HR department or payroll system this month and update your W-4. If you got a refund last year, reduce your withholding and redirect that money into investments throughout the year. If you owed money, increase your withholding so you're not scrambling next April. The IRS has a withholding calculator on their website. Use it. 5 minutes. Now save your stress and potentially penalties later. Now let's choose your tax strategy. Itemize or standard deduction. For 2026, the standard deduction will be around $15,000 for single filers and $30,000 for married couples. If your deductible expenses won't exceed this, you're taking the standard deduction and you need to plan accordingly. However, if you're close to the threshold, you want to bunch deductions into 2026 to push yourself over. Make this decision now, not in December. Now it's time to set up estimated tax payments. If you're self-employed, a freelancer, or have significant investment income, you need to make quarterly estimated tax payments. The dates go April 15th, June 15th, September 15th, and January 15th of the following year. Missing these deadlines means penalties and interest. Set calendar reminders right now for all 4 dates. We also need to track everything from day 1. Here's a game changer. Set up a system this month to track deductible expenses throughout the year. Open a separate folder, digital or physical, for the following things. Number 1, charitable donation receipts. Number 2, medical expenses. Number 3, business expenses if you're self-employed. Number 4, mileage logs for business or medical travel. Number 5, property tax statements. And last but not the least, mortgage interest statements. Don't wait until next March to scramble for receipts. Build a habit now. Strategy 2 is all about front-loading your retirement contributions for maximum benefits. Here's something most people don't realize. Contributing your retirement accounts in January instead of December gives you an extra year for compound growth. If you max out your IRA in January 2026 versus December 2026, that's 11 extra months your money is invested and growing. Over 30 years, that timing difference can be worth tens of thousands of dollars. You still have until April 15th, 2026 to make 2025 IRA contribution if you haven't maxed out yet. For 2025, the limit is $7,000 or $8,000 if you're 50 plus. If you're in the 24% tax bracket, that's up to $1,920 in tax savings for last year's return. But here's the smart move. Make your 2025 contribution now in January, then start your 2026 contributions immediately after. You're essentially making 2 years worth of contribution in Q1 of 2026. For 2026, the 401k limit will likely be around $23,500 or maybe around $31,000 if you're 50 plus. If you can afford it, front load your contribution in the first few months of the year. Now you might be asking why. Your money starts working for you immediately. Plus, if you get a raise or bonus mid-year, you've already handled your retirement savings and you can use that extra money for your other goals. Log into your 401k portal this week and see if you can increase your contribution percentage for the first quarter. Don't forget the employer match. At minimum, contribute enough to get your full employer match. That's literally free money, a 50% to 100% instant return. There is absolutely no investment that guarantees that. Now let's talk about HSA, the most underrated account. If you have a high deductible health plan, max out your health savings account as early as possible. For 2026, limits will be around $4,300 individual or $8,550 for families. Add $1,000 if you're over 55 years of age. The HSA is triple tax advantage. Deductible contribution, tax-free growth, tax-free withdrawals for medical expenses. It's better than a traditional IRA and better than a Roth for medical costs. Here's a pro strategy. Contribute the maximum in January, invest it aggressively, and pay medical expenses out of pocket. Save those receipts and let the HSA grow for decades. In retirement, reimburse yourself tax-free. Roth conversion in low-income years. If 2026 will be a lower income year for you, maybe you're between jobs, starting a business, or taking time off. Consider doing a Roth conversion. You can convert money from a traditional IRA to a Roth IRA. Pay taxes at your current lower rate and then enjoy tax-free growth forever. This is advanced planning, but January is the time to evaluate it with a tax professional. And if you're self-employed, open a SEP IRA or solo 401k. If you're self-employed, you can contribute way more than regular employees. A SEP IRA lets you contribute up to 25% of your net self-employment income up to around $69,000. A solo 401k gives you even more flexibility. Set these up in the first quarter so you're ready to make contributions throughout the year as income comes in. Strategy 3 is about building habits that make tax time effortless and maximize your saving. Number 1. Automate your retirement contributions. Set it and forget it. Automate your IRA contributions, maybe about $600 per month, to max out your $7,000 annual limit. Automate your HSA contributions. Increase your 401k percentage so it happens before you can see the money. Automation removes willpower from the equation. You can't forget, you can't procrastinate, and you won't be tempted to spend that money elsewhere. Number 2, create a tax saving account. If you're self-employed or have side income, open a separate saving account specifically for taxes. Every time you get paid, transfer 25% to 30% to this account immediately. When quarterly estimated taxes are due, money's already there. No stress, no scrambling to find cash. Number 3, track business expenses in real time. If you're self-employed or have a side hustle, use an app like QuickBooks Self-Employed, FreshBooks, or even a simple spreadsheet. Log every expense when it happens. Business meals, software subscriptions, office supplies, mileage, track it all. Every dollar you document is a dollar you can deduct. Last but not least, mileage tracking for 2026. If you drive for business, medical appointments, or charitable work, start tracking mileage now. For 2026, the IRS mileage rate will be around 70 cents per mile. If you drive 10,000 business miles this year, that's a $7,000 deduction. But you do need documentations. Use an app like MileIQ or Everlance that automatically tracks your drives. Another thing you can do is review quarterly. Don't wait until December to think about taxes. Set quarterly check-ins. First, in March, review quarter 1 income and expenses. Adjust withholding if needed. Second, June, make quarter 2 estimated payment. Review retirement contributions. Third, September, assess year-to-date progress. Plan for quarter 4 strategies. And then December, execute any final year-end moves. This will keep you proactive instead of reactive. Consider tax loss harvesting throughout the year. Don't wait until December for tax loss harvesting. If you have taxable investment accounts, review them quarterly. If investments are down, consider harvesting losses to offset gains. The wash sale rule still applies, but spreading this strategy throughout the year gives you more flexibility. Consider working with a tax professional. If your financial situation is even moderately complex, you're self-employed, have multiple income streams, own real estate, or have significant investments, hire a CPA or tax strategist. The cost of professional help is usually thousands of dollars less than the taxes you'll save through proper planning. Schedule a meeting this month to create your 2026 plan. Let's wrap this up. 3 New Year tax moves to implement right now. 1. Set up your foundation. Adjust your withholding. Decide on itemizing versus standard deduction, and create a system to track expenses from day 1. 2. Front load retirement contributions. Max your IRA for 2025 if you haven't, then immediately start your 2026 contributions. The earlier your money is invested, the more it grows. 3. Build smart tax habits. Automate your contributions, track expenses in real time, review quarterly, and work with a professional if needed. Here's the key insight. Tax planning isn't something you do once a year in a panic. It's a system you build starting now. Pick one action from today's video and do it this week. Adjust your W-4, set up automatic IRA contributions, download mileage tracking app. Just start today. If this video helped you, hit that like button and subscribe for weekly personal finance content that actually makes a difference. Comment below what's your first tax move for 2026. Good luck for your smart financial year ahead. See you in the next one.